Hello students, hope you are doing well, and I welcome you all in the day 2 practice to pass webinar for paper PM performance management. And I am your trainer, your tutor Haris Hanif uh, from Tabani's School of Accountancy. This is my WhatsApp number. Most of you people are having my WhatsApp number, and today we are going to resume this webinar from the area where we had ended yesterday. Yesterday it was day 1. We had the introduction session, then we had a little motivational session, and we discussed about absorption costing and activity based costing. And today, and we also started the topic target costing. And I have told you in the last class, which was yesterday, that one case OTQ you should assume, you should expect from the costing area. And we will be doing a few OTQs, case-based OTQs, because this will help you out to secure your at least 10 marks, right? And going to start this, before going to resume this thing, I would like to give you a very quick and a short recap of the topic target costing. And target costing is about that you do not set your selling price. Target costing does not mean that you set your selling price. Target costing does mean that you obtain the selling price from the market, right? And we had a discussion on this target costing. That target costing is that you'd pick up the selling price from the market, and that is known as the pull system. That you obtain the selling price from the market, you set your target profit, and you calculate the cost which is expected to be, that is the target cost. And then you are calculating your own expected cost, your own estimated cost, and then you will be comparing it in order to calculate the cost cap, right? In order to calculate the cost cap that we had completed in the last class, which was yesterday. And today we are going to, this handout is already attached in your handout section. You people can download it from there, and whatever the annotations I am making, I will also be sharing. And I'm expecting that most of you, or probably all of you, might be in the WhatsApp group. If not, then the link of WhatsApp group would be shared. No problem at all. And for testing purpose, can you people please confirm me that my voice, screen, video is all clear? Please reply in the question box. Be interactive. Am I audible? My voice, screen, video is all clear? All of you? Right. Now that's good. And what I do believe, that whatever the paper you are attempting, whatever the paper you are attempting, you should practice the most recent questions. You should practice the most recent questions as well. If I can guide you accordingly, then you should practice at least the last 2 years, since you are appearing in September 2022. Okay, and you should practice for 2020 and 2021 papers at least. No matter, you can also even practice the previous questions like 2016, 2017, 18, 19, based on the contents and the complexity of the questions you should practice. But at least since your 60% paper is based on MCQs and OTQs kind of question, so you should practice those MCQs, and these are available in the examiner report. Yes, examiner report. And I will also be solving those case OTQs and MCQs. Here there's a question, and if I remember that I had given you the task yesterday, that you people should try this question, right? You should try this question. And this is a question from, I have extracted from examiner report. It's Darask company. It's from September, December 2021. As you can see that this question probably might not be available in your official exam kits, since it is the one of the recent question, or it quite may be possible that it is available. So because there are more than one official publishers, that's what I'm talking about. So use your ACCA resources as well to practice well for your exam. This is the question, and the question name is the Rask company. And what I told you, what I guided you yesterday regarding the case OTQs technique, especially that you need to scroll it down. You need to scroll it down. Just scroll down. Yes, analyzing introduction, growth, maturity. You are clicking the topic of life cycle costing. Then move ahead. Um, just go through the yes target costing, initial profit margin, and all that stuff. Now I came to know that this is the question which is related to the topic target costing. This is a question which is related to the topic target costing, and so you should read this question. You should then read this question considering the target costing in mind. Now, what is the target costing? We had discussed that target costing is that you pull up the selling price from the market, then you deduct your target profit to calculate the target cost and then cost gap and all that stuff. And simultaneously, at the same time, you should focusing on the thing that there are many ways to reduce the cost gap. There are many ways to reduce the cost gap. So whenever you are studying the for the case based OTQ, you should assume that all the concepts of target costing or whatever the topic is under consideration can be examined. So read the question accordingly. So you should read the question accordingly. Sorry for that. Now students, I am giving you just 1 minute window in order to read this question from starting till this paragraph. Please read this information very carefully. All right, now I'm going to read this question. Darask is a global consumer electronics manufacturer. It sells its own brand of smartphones. It sells its own brand of smartphones and uses that whatever the information is. Main point is that they are using the target costing. DPAT feasibility study results. The board of Darask Co. has conducted a feasibility study in order to decide whether or not to launch, whether or not, either yes or no, whether or not to launch a new device, the D-pad, in 20x9. That means it would be 2019. The D-pad will have 3 years life cycle. Our next topic for today's agenda. And first of all, I would like to make it clear that what is the agenda for today. It is basically target costing, lifecycle costing, throughput accounting, all right? And then we will be moving towards performance measurement and then a few other MCQs. These are basically the total agenda for all the 4 days, including today we have 3 days till Saturday. And we are trying our level best to catch at least those areas which are very important for the examining point of view, right? So these are the basically and simple agenda. The D-pad will have 3 years life cycle. It's 3 years life cycle over which a total of 80 million units will be sold. Total of 80 million units will be sold, and you can witness it from there. That is 8, 14, 56, and 2. This would become 80 million. It is in millions, right? Now, the variable manufacturing and selling cost is currently estimated 123 per unit. The total fixed cost, including investment and overhead, is budgeted to be 3360 million over the whole life cycle. The initial estimate of the selling price included in the feasibility study was calculated to ensure profit markup of 60%. Now, this is the market research analysis. I'm now moving towards, I'm ignoring all the other information. And first of all, I am going to read this question number one. In this question number one, in this question number which is not specifically related to the case. All the way it can be examined in a knowledge based stuff as well, this kind of a question. So you should read this these two requirements. Which of the following statement about the use of target costing at task is or are true? Number one, it relies on just-in-time process in order to work. The answer is no. The answer is no. Why? Why? Because in target costing, there is a very important focus on the cost reduction and to maximize the profit. There is the important attention to maximize the profit. In target, to maximize, or you can say to achieve the target profit, right? There is a thorough attention towards maximization of the profit and to achieve the target profit. And target costing focuses on cost reduction, not the just in time. Just in time is the mindset of the throughput accounting, which we are going to study it later on. So it relies on just in time. And what is just in time actually? Just in time is actually says that you do not need to hold too much closing inventory. When you will be having too much closing inventory, there would be the chance of increasing the holding cost, and so your profitability could be reduced. Because if and your profitability could be reduced. So just in time is actually says that produce the raw material when there is the when there is the when there is the demand. All right. So just in time is actually the concept being focused on by, you can say, throughput accounting. Number two, it can be used alongside life cycle costing and planning. The answer is yes. That's only two only. Now, what is this thing? What is life cycle? You are aware of the life cycle principles. You might be aware, right? Life cycle is actually the estimated life of the product. Now, if I am estimating 3 years or 4 years life of my product, if I am estimating 3 years or 4 years life of my product, so the concept of target costing can be easily applied. The concept of target costing can be easily applied, right? The concept of target costing can be easily applied. That is within the 3 years of time span, i should achieve my target profit. Within the 3 years of time within the 3 years of time span, I should achieve my target profit, right? I should achieve my target profit. So this is actually the thing. The concept of target costing and the concept of life cycle costing can be used together. The concept of target and life cycle costing can be used together, right? So here you can see that it's basically life cycle plus target. The answer is absolutely yes. Number two. So here it is. Here it is a simple solution number two. Now the next point is that what is the initial selling price of DPAD from the feasibility study to the nearest whole dollar, right? What is the initial selling price from the DPAD feasibility study report? So that means you should refer the feasibility study report, right? This was the only thing we should need to focus on. Number one, the variable manufacturing and selling overhead is estimated $123 per unit, and 3360 million is actually the total fixed cost. And in the whole life cycle, there are 80 million units. So I need to calculate the initial selling price based on per unit. I need to calculate the initial selling price based on per unit. There's a selling price. It's not the total sale, it's the selling price. So if I can say that my variable cost is 123 and my fixed cost is, what is the fixed cost? What is the fixed cost? Fixed cost is actually 3360 million, and that is the total fixed cost. I need to apportion it over number of units, 80 million. So that would become 42. So it's 123 plus 3360 million divided by 80 million. So it would become 42. And you can see that your cost is 123 plus 42. That's 123 plus 42. That is 165. So 165 plus you should add 60% profit markup. 60% profit markup. And that is $264. Right? So 264 is my answer. So 264 is my answer, and that is the initial selling price I should need to quote, and this is my simple answer. So you will be writing 264 in your blank, right? This is to 2021 exam question. This is 2021 exam question you should focus on. So I guess it was quite easy and attainable question. Now let's move ahead. Based on market research analysis, now the question is turning to the another side. Based on market research analysis, now the question is saying, based on market research analysis, what is the total cost gap? See, what is the total cost gap? They are not talking about, students, they are not talking about the cost gap per unit. They are talking about the total cost gap. Total cost gap, right? So they are talking about the total cost gap. What is the total cost gap of DPAT? If Darask wants to achieve target profit of 45 million, now you should use the information which is given in the market research analysis. So I will be using that information, right? I will be using that information, market research analysis. Now this is basically the market research analysis report, market research analysis, and here it is. Will you people please look into this information? Just have a quick look. Now you should put your efforts. This is selling price per unit, and this is total sale volume. The question is asking me for the total cost gap. The question is not asking for the cost gap per unit. They are asking for the total cost gap, and we should need to calculate the total cost, total sale revenue, total, whatever the working I will be doing, that will be on the total figures. So the point to be noted is that the board decided to commission some market research to determine the price customers would be willing to pay. Sales volume and sale price were estimated for various stages of the DPAD life cycle as follows. And these are the information. Based on market research, the board has approved the development, whatever, and the total cost does not exceed 13,000 million. That is the important punchline for me. Now let's move ahead. And it is written about the selling price and number of units, selling price and the number of units, and I should make it a very total calculation. I should make it a very total calculation, right? So first of all, I'm going here for the total thing, right? So I want from the market research analysis. That's introduction, growth, maturity, and decline. You should calculate the total sales. You should calculate, students, the total sale, and that was 8 into 425. That was 14 into 300. That was 56 into 220, and that was 2 into 120. These are the figures, right? So I need the total sale value. I need the total sale value. Please calculate this. I'm also calculating here. 8 into 425 plus 14 into 300 plus 56 into 220 plus 2 into 120. It is now 20160. It is my 20160. It is 20160. And what is the target profit? It's 45%. That's $9072. And that is target cost. So if you want to earn this target profit, your cost should be 11088, right? And what is the estimated cost? The estimated cost is this 13,000 million. The estimated cost is this 13,000 million. And you should compare with this thing. You should compare with this thing. The estimated cost. It's 13,000. So what is the cost gap? They actually need the cost gap in total. That's 1912. So B is the option. B is the ultimately correct option for this thing. See that what we had calculated the total target cost and total estimated cost and total cost gap. That's very simple. That's very simple, right? Now let's move ahead for the theoretical aspects of this question. We have to finish this and we have to move forward for the life cycle costing as well. And here it is saying that the following proposals have been made in order to close the cost gap. Now listen that whenever you are trying to close down the cost gap, you should focus on cost reduction. You should focus on the cost reduction, right? So read, please read these 3 points for the proposals in order to close down the cost gap. Please read these 3 proposals and identify which one is the appropriate option for this. Which one is the appropriate for this? Number one. Number one is that introduce 24-hour working in the factories where DPAD is made in order to increase the production and build inventory. Would this would this be useful to build up the inventory? No. 24-hour working facility would increase your cost. Now you could be arguing that, sir, we should increase our production in order to allow the fixed cost on per unit to be reduced. Now I can do that, but demand in this specific question my demand in this specific question is of only 80 million units, and that 80 million units are my estimation. Why I will be making too much efforts to build the inventory? So this option would be crossed, and if one is getting crossed, that means D is crossed, A is crossed. We have left with 2 and 3. See that we have left between 2 and 3, and since option point number 2 is in option C and is in option B as well, so that means second statement is absolutely correct. Without reading that thing, I concluded that second statement is right? And so we just have to focus. Now these are the cracks and tricks to solve the MCQs. If you are successful in such kind of the strategy, you are supposed to solve this question very comfortably. But I'm not going for giving you the tricks and guess the answer. I will also simultaneously recommend you to read the question understand the requirement, read the question, understand the requirement, and try to apply the concept. You are in the applied skills module. You are not in the knowledge based module. You are in the applied skills module right now. Incorporate quality assurance inspections into manufacturing process to reduce faulty units. To reduce faulty units, you are introducing quality inspection thing to reduce the faulty units, and see that if the units are getting reduced, the faulty units, and you are saving it from the cost. So that is basically the cost saving. That is basically the what cost saving, so that my units will not be faulty. Number three, increase the sale and marketing spend in order to boost the sale volume of dpad. Come on, it is a life cycle principle. If you will if you will spend too much, but this is focusing on the cost reduction, so this is not the appropriate strategy across, and option C is the correct one. Option C is the correct one because point number 3 is suggesting me Point number 3 suggesting me to increase the spend on the marketing. But the concept of target costing is saying that reduce your cost. So this is not applicable in order to close the cost gap. You have to reduce the cost gap. All the way you can spend more on marketing. It's not your choice. But in order to close the cost gap, you should at least reduce your cost. And this is not the good strategy. Next. The next one is the last MCQ for this case study. In relation to the use of target costing for all the retail outlets, which of the director's statements are correct? Now I should go up. Please read these things. Please read this thing. These statements of the 3 directors. And simultaneously remember that while you are reading these statements of the directors, just note it down who is saying correct. Okay, now I'm going to read all these information. Director X, the board has been discussing whether it is possible to use target costing in relation to the retail outlets. The following statements have been made. Number 1, number 2, number 3. Director X is saying that target costing cannot be used because it is difficult to estimate target selling price in the services. He is giving me the absolute statement that it cannot be used. We will be studying target costing can be used in services, but target costing can be used in services, but it is difficult. That it does not mean that it is impossible. It is difficult but challenging, but the director X is saying it cannot be used. All right, so this is the he is giving you the wrong statement. So product X, sorry, director X is here cross, he's even here cross, so that means we are having Y and Z here. So that means Z is in both. Z is correct. So we have to read Y, but I will be reading both. The target costing is most useful when the what is being developed and has high degree of variability in services. Not at all. You know, services can be changed. There is no consistency in the performance criteria. There is no consistency in the performance criteria. The services may not be standard all the time, right? So change of new services. So he's saying that target costing is useful in the changing. No, it is useful when the product is at stable condition. It's talking about changing. No. So target costing when developing new services is difficult. Yes, he's saying difficult because services are intangible and not always possible. He is correct, but he's saying that it cannot be used. He's saying that it cannot be used. He's giving the absolute statement. He's giving the absolute statement, right? So he's saying that it cannot be used, and this does not make sense. So director Z is right. That's the only. All right. Now, target costing and services. Services you all know, like your educational institutes, like your bank, like hospitals, etc. Can target costing be used in services? Can target costing be used in services? The answer is absolutely yes. But it is not, but it does not mean that it cannot be used. It can be used, but there are some challenges. So target costing and services, it can be used in the services. It can be used in the services, but there are some challenges. I mean difficulty. But there are some challenges, that means difficulty. You know what? I can give you the practical example. The airfare, I mean the ticket price of aeroplane changes. It changes on daily basis. The rates of the flight is different at the peak hours, at early in the morning, in the late nights, in the afternoon. The rates gets changed. Many of the restaurants, they are charging different prices. Many of the hotels are charging different prices. For example, there is a 4-star hotel and there's a 5-star hotel. There are two 5-star hotels, and the prices of both hotels could be different. It based on season because they are providing the services. Internet providers services, educational teachers services. In services, there are different selling prices, and selling price is difficult to obtain. And selling price is difficult to obtain. All right. So there are some challenges, that different selling prices of service providers, and difficulty to take the selling price. One more thing, this is the service. One more thing, this is the service. They have um, they have a complex calculation. For example, that there is a transport company, they are confused that which costing method should they use. Should it be a portion on cost per kilometer, cost per passenger? No. So there is a complex calculation, and obviously in order to reduce the complexity, they will be using cost per passenger per kilometer, cost per passenger per kilometer, and their costing is a little bit complex. So I'm not saying that it cannot be used. It can be used, but there are some complexity, complex calculations, right? It is difficult. It is difficult to define unit. That is it per unit, per kilometer, per passenger? What is the per unit, right? So it can be used in the service industry, Target costing can be used in the service industry, but there are some challenges which we have discussed here. Right now, we have completed the topic of target costing. We have completed the topic of activity based costing yesterday, and now I am going to start with another topic, and that is the life cycle costing. That's the life cycle costing, right? So here I am opening this life cycle costing. This is the life cycle costing. As you are having this in your handout section as well. This is the life cycle costing. This is the graph, a question, and September December 2020 case OTQ. I would love to show this thing first, that what are you doing? You should know it, that what are you actually doing. So let's move ahead for the understanding of the topic, life cycle costing. What is this life cycle costing? First of all, there is a different thing, life cycle, and there is a different terminology, costing. So life cycle is something else. Life cycle costing is something else, right? Now, we will be understanding this life cycle with real world example, some practical examples. See that life cycle principle cannot be used on the basic necessities of the products, like that there's a water in this bottle, and the life of this water cannot be ended. I need it right from my birth to the death, because it is not applicable on the basic necessity. Life cycle principle is usually applied on the products which are technologically, which is technical in nature, right? Which is technical in nature. So life cycle principle is applicable on the technological products. Let's say, for example, it's a product life cycle, right? It's not a company life cycle, it's a product life cycle. Let's say, for example, we used to have a scanner machine in our offices. Right now, they are still there. Even the very well-established organization, they are also having the scanner machine. When I was working in the factory in the accounts department, when I am me talking about myself, Haris Hanif, I have seen that thing in the practical life. But nowadays, whether it was the company where I was working, in the firm, in the previous institutions, even this in this institute, Tabanisi School of Accountancy in Tabanisi Academy, we have the scanner machine. But nowadays, the scanner is just a click away. For example, you pick up your mobile phone, you just take a picture through the scanner application. To the scanner application, see that the need for the scanned document is not over yet, but the demand for that particular product is getting declined, and it is being replaced by the new product. So the life cycle principle, what do we mean by the term life cycle? There was a life start of that scanner machine. It is now at the declining mode, or maybe at some other phase. So similarly when the similarly there is a birth of the human and there is a death of the human, right? There is a birth, there is a death of the human. Similar is good for the product. It's a life cycle of the product. It's a life cycle of the product. Life cycle, it's basically the expected time period. And remember that you are doing the costing, and that means that you are making it as the estimations. You are making the estimation. So what is the life cycle of the, this is the expected life cycle. That means time period, expected life cycle, in which a particular product remain popular in the market. It's the expected life cycle time period. The time period does not mean 1 year. It does not mean 1 year. No, It's actually the time period. It is actually the time period in which a particular product remains popular in the market or expected to remain popular. These are the these are the general stages of life cycle. It is not 100% sure. It's not 100% sure that every product reaches all the life cycle stage. These are simply the expected stages in the life, and these are not even the number of years. These are the stages. Let's say when a person is born, and it is its childhood, then it gets mature, further mature, then becomes old, and ultimately goes to the grave. So these are actually the expected life cycle of the product, right? These are not the actual. So see that it is horizontally, there is a placement of time, and there is sales and profits. Here, these are the sale revenue, and obviously there's a difference of cost, and these are the profits. This is the stage of development. Number one, number two, number three, number four, and number five. This is development, introduction, growth, maturity, and decline. Introduction, growth, maturity, decline. In the development stage, there is no profit. Obviously the profit cannot you cannot achieve the profit, because this is the stage when you are incurring, when you are having high cost, when you are having the high cost of research and development. So in the development phase, there is no profit, there is only cost. There is only cost, right? In the introduction phase, the product is newly launched. The product is newly launched. This is known as the introduction phase. The product is newly launched. Number three is that growth phase. In the growth phase, your acceptance, the acceptance of the product, you are achieving the acceptance of the product. That is, the product is getting more and more popular. So that is, product is accepted in the market. It's the maturity, and that's known as the peak stage. That you are at the top, you are at the top level. See that you are the market leader kind of thing. If I can say you, like in these example of social media, Google, Facebook, and all these are famous social medias. They are at the maturity phase because they are market leaders. And now the point comes when the demand is getting reduced. The demand is reduced, right? And this is the stage. This is a very critical stage. Maturity. In this maturity stage, the organizations should bring something new in your product or services. I can give you the live example. You all are using WhatsApp. We all are using WhatsApp, and there are regular updates in the WhatsApp. WhatsApp is kind of a market leader in this communication era, right? So because it's easy to communicate, it is easy to communicate anywhere, anytime. So WhatsApp is at the maturity stage, and it quite may be possible that WhatsApp is having the threat to be declined, because in this technological equipped environment, every company is trying to become a market leader, and it quite may be possible that any new services can be introduced in the market, and there is a threat to my product. So the message is that in that maturity stage, companies should bring something innovative in order to be interactive regular. See, I'm giving the example of WhatsApp. If you go some time back, there was not the option of delete for everyone. Now it is there. Now, previously when you go, there was a voice clipping, and now they have introduced 1x, 1.5x, and 2x speed. They are getting regular updates in order to increase the maturity phase, so that people will be in contact with the product or services. Similarly, if you go probably 1 or 2 years back, it was not the reels on the Facebook, and right now it's there. So what I'm trying to say, that they are trying to introduce innovative features. So when you will be introducing the new and innovative features in the maturity stage, your product lifespan can be increased, right? So in this maturity phase, you should introduce the innovative elements to increase the lifespan. So this should be the case. This should be the case that you should introduce that innovative features. All right. Uh, yes, Faisal Abdullah, we had solved the Rask company question of target costing, and Aisha Suman Faisal Abdullah. Yes, the last class, I mean the day one, will be uploaded on YouTube channel of ACCA Pakistan, and you people are in the WhatsApp group. I will be sharing the link of the first class as well. Don't you people worry about it. Now let's move ahead. So this is basically the product life cycle. This is basically the product life cycle. This is not the costing, this is the life cycle. And what is the life cycle costing means? The word costing means estimating the future cost, and this is a life cycle, right? Expected popular time period. And costing means estimations of the cost. Costing means estimation of the cost. And remember one thing, the cost is production plus non-production. So in life cycle costing, you are actually making a profile of the cost, making the profile of the cost over the entire life, not just 1 year. So this is the differentiating point between life cycle costing and the traditional costing, that you should make the cost profile over the entire life, not just year one. It is a traditional costing. And here you can calculate cost per unit. You can calculate cost per unit like total life cost divided by total expected life units. Total expected life cycle units, right? So this is total life cycle cost, total expected life units. This is the way to calculate the cost per unit in a life, right? Now let's move ahead for the examples, questions, MCQs, and then we are moving towards the case OTQ as well, since it may be examined in your real paper. I cannot give you the 100% surety about this topic. It quite may be possible life cycle, target, throughput, whatever, but the costing area will be examined in case OTQ. Now let's move ahead. This is the question. This is the question in front of you. I would like all of you to have a quick look on this question, and then we will be having this case OTQ, right? And then thereafter, this life cycle would be finished. Please read this question. You are supposed to calculate the life cycle cost per unit, right? You are supposed to calculate the life cycle cost per unit. All right, students, it quite may be possible that you have read this question. Now, we will be, I'm giving you 1 minute window. Can you people please solve this question? Please solve this question. Is there any answer for it? Is there any answer? Yes, it quite may be possible. It quite may be possible. It quite may be possible that your answers are right. Now, see that what is the question here? The company has estimated 4 years life of the product. Depreciation charge per year is 28,500. One question which students ask me that whether we need to take the depreciation. The answer is yes. It's not actually the depreciation. If you are receiving the cost of machine, that is total cost. That is total cost divided by life, right? So that total cost, and that you will be able to calculate depreciation. So the life is of 4 years and the depreciation is 28,500. The life is 4 years and the depreciation is 28,500. When you will be multiplying, you will be getting the total cost. You will be getting the total cost of the machine, which is necessary for this, production, right? So here we are taking this depreciation, considering it as the cost of the machine, right? Considering it as a cost of the machine. So here, calculate the life cycle cost per unit. So I will be taking at cost of machine, that is 28,500 multiplied by 4. That's 28,500 into 4. That's 114,000. And then there will be total 4 years. Its total 4 year production cost 600,000. That is 600,000. And secondly, there is variable selling overheads 5 per unit. Variable selling overhead 5 throughout the life. And one thing is that production and selling units are these. Will you please total it, the selling units over the life? It's 2000 plus 2500 plus 3000 plus 5000, and that is totaling 12,500 units over the entire life. It's 12,500 units over the entire life, right? It's 12,500 units over the entire life. So I need to calculate it accordingly. That is the variable selling overheads $5 throughout the life. That's variable selling overheads. That's variable selling overheads, that is $5 into 12,500 units. 5 into 12,500 units, that would become 62,500. I have incorporated these things. Training cost over the life 50,000, and research marketing and other costs 300,000. That is training costs, and that is marketing plus research and development. That is 50,000, and that is 300,000. The total cost, can you, yes, you might be calculating with me. That is the total cost of life. 114 plus 600 plus 62.5 plus 50 plus 300, that is 1126500, isn't it? 1126500 divided by 12,500 units divided by units in life. So that is life cycle cost per unit. That is life cycle cost per unit. That's 90.12. And your answer, those who were responding me in the question box, they are having the accurate and correct answer. F. Rizan. Is there any confusion with this calculation? Can you please tell me your confusing element? By the way, first tell me, uh, were you connected from the start of the question? Production cost, right? Okay. The production cost is that production cost is total 600,000. It is total 600,000. It's total 4 years production cost 600,000. 4 years total production cost. And while taking the life cycle costing, we take production as well as non-production cost. So we will have to take training cost, marketing cost, and all the cost. So I had calculated first all the cost over the expected life, and that I had divided it with the units expected in a life. And simply I got a life cycle cost per unit, that is 90.12. What's your name? F. Rizan. F. Rizan, is it now fine? Okay. Okay, that's good. Now we have successfully completed this life cycle example. Now let's move ahead for this September December 2020 question. September December 2020 question, Midhurst company, and this is the question of life cycle. This is the question of life cycle, right? So first of all, let's have a quick look. Like you are in the exam and you are having this case OTQ question 1 2 3. You notice that this is talking about life cycle, and then you should read out the question keeping in mind the concepts of life cycle. So I am giving you just a few 1 or 2 minutes. Take 1 or 2 minutes to read this question right from this area, and then I will be solving it. Now, um, now I'm going to read this thing from start. Midas company manufactures air conditioning units and is considering an investment in a new unit that will be used in modern office buildings. Advances in technology mean that this unit is more sensitive to the changes and variations in the temperature, and therefore it can regulate airflow and heating more efficiently. Midas company competitors currently do not have an equivalent product that can offer these features. Midas company expect to sell 10,000 units over the predicted 5-year life. The finance director has just prepared the initial costing for the unit as follows. These are the things, and all the things are in triple zero. All the things are in triple zero, right? These are the things you need to calculate in triple zero. And so, uh, but one thing to be important, one thing to be noted is that all these are the cost. This is on per unit. This is on per unit, and this is on per unit. Rest of the other costs are the total cost over the life. Rest of the other costs are the total cost over the life, and this is for the 10,000 units. This is for the 10,000 units, and rest of the other costs are for the total cost over the life. And we need to calculate these costs right now. Uh, Keep this thing in mind. The finance director plans to use life cycle costing to measure the profitability of the new product. They are trying to measure the profitability of the new product, right? And secondly, the CEO has asked for some more information about the life cycle, as she's not sure whether it is right to use. The production director has reviewed the costing in detail and suggested a couple of changes. He is enthusiastic about product and believes that modifications could be made to prolong product's life, but wonders when the best time would be to make changes to the product. Number one, according to the life cycle costing method, which two of the following statements regarding the stages of life cycle are true? Which two? You need to identify, pick up the two statements which are correct with respect to the stages of life cycle, right? So will you people go through all these 4 points? Just go through all these 4 points, and then I will be solving this. Number one, at the introduction stage, further capital will be needed as production capacity needs to increase to meet the demand. Yes, it quite may be possible. When you are forcing that in introduction stage, you are forcing that your demand is going to be increased. Your demand is going to be increased when you are forcing that in the introduction phase, right? So you need to inject more capital. You need to inject more capital so that your production capacity could be increased to meet the demand. And this is absolutely right. Number two, the maturity stage occurs when the market has reached the saturation point and bought enough of the product. This is not the case. This is a matter of decline when the market has reached the saturation point. No, that's not the thing. Maturity stage is that when you are at the peak level, not going to be declined. Number three, the majority of the product lifecycle costs, as you can see that these are the majority costs can be estimated. And according to the analysis, 70 to 90% of the cost can be estimated at the design stage. 70 to 90% of the cost can be estimated in the design stage, right? So majority of the cost, and you can see that these are the majority of the cost can be estimated in advance. It's approx 90%. You can say 70 to 90%, right? So the answer is absolutely yes. The majority of the product lifecycle costs are determined by the decision which are made at the design and development stage, that this cost would be incurred, that cost would be incurred, that cost could be incurred. So approximately 90% of the cost can be estimated. The last point, obviously, it would be wrong because we need two uh, statements which should be correct, right? We need to the growth stage when sale will have reached the peak. No, it's a maturity stage. It's a maturity stage when your sales are at the peak and become stable, right? So and will be the most profitable stage. No, it is the maturity stage. So these two statements are wrong. Number two, what is the cost per unit of the new air condition using a life cycle costing to the nearest dollar? I am solving this question here. I'm solving this question here in this PDF file, right? I'm solving this question in this PDF file here so that I will be able to save it. Which cost per unit? What is the cost per unit using the life cycle costing? And remember that just click the picture, or you are having the handout in your mobile phone or in your laptop. These are the costs, but this is the per unit cost. This is the I will be using different color for per unit cost, right? So you need to calculate it accordingly. I have already written it down these costs so that I have to solve it. And now I am going to write these things, and these are the per unit cost, right? And this is for 10,000 units. These are the per unit cost. I need to calculate the total cost, and then cost per unit. So here I will be calculating the total cost. I will be calculating the total cost here. Previously, it was 6,200. That was the total cost. Secondly, it was 33,450. It's the total cost plus 177. 685, that is the total cost, plus 42 into 10,000. 42 into 10,000. Why? Because it was 42. 42, the above the triple zeros are getting ignored. 42 into 10,000, right? And this was a per unit cost, plus 98 plus 98470 plus 98470 plus 9 into 10,000 units plus 10,300 plus 4 into 10,000 units, and these are the things which is based on per unit, and rest of the other costs are total, that is 7790 plus 23450. So the total cost, what is the total cost? Please calculate the total cost here. 33450. I'm calculating it by myself as well. 177,685 plus 42 into 10,000 plus 98470 plus, I'm solving all the things. It is 907,345, and see that these all costs are ignoring triple zero, because we are not taking the triple zero. And now I need total cost per unit, so that will be 907,345. This was ignoring triple zero, so I will be dividing by 10 only. So if you want to take 10,000 completely, you should write 3 zeros at the top priority, right? So divided by 10, that would be 90,735. That would be, and this is the answer, 90,735. This is the answer, right? So this is your answer is absolutely right, whoever calculated this. Option D. Yes. Mr. Aurangzeb Imam, when I'm solving that, it takes me 1 or 2 minutes to read your question. I'm explaining, I'm all the thing again. All right. Don't you worry about it. Okay. Thank you so much for your patience. Question number one, option A. First, note it down. It quite may be possible that you are noting it down. All right. That's question number one, option A. Question number one, option A. At the introduction, is this you were talking about? All right. Now, in this, yes, lemon. Uh, that means 10,000 units should not be used. Yes, you should use 10. Why? Because you should take. Because you should take the complete. You should take the complete 10,000 units. You should take the complete cost. You should take the complete cost, right, Mr. Lemon? Do you understand this thing? Because since you can observe that here the triple zeros are being ignored. I'm ignoring these triple zero, right? Lemon, is it now fine? Is it now clear so that I can proceed? Lemon. That's good. Aurangzeb Imam, your question was, at introduction stage, further capital expenditure will be needed as the production capacity need to increase the market demand to meet the demand. at the introduction stage, when my products is being sold, I am forcing that the next stage can be the introduction, thereafter growth. I need more capacity. I need more capacity to increase my production capacity and to meet the demand. And for that, I need to spend much capital amount, right? I need to spend much capital amount for that thing. So that's a very simple thing at the introduction phase. If you can see that if you are in the introduction phase, right at this introduction phase, and you have to move forward, so obviously you need to produce more and more units, so you need the capital investment. Is it now clear? Aurangzeb, it is now clear? Okay, now let's proceed. This is question number 3, and please, I have extracted this question just because of question number 3. It's really a very good requirement, simple and good requirement. Please read this thing. What would be the revised material cost? Revised, and they are bringing some change. They are bringing some change in the costing, and so definitely when there is a change, the cost would be revised. The cost would be revised. Okay. So the production director has suggested the following change for the costing of the new unit. Currently, the material costs are 20% of variable production costs. Currently, whenever there is a change, you need to have the information of the current material. So that is the variable cost is 42,000. Variable cost is 42,000, right? Variable cost is 42,000. And currently the material cost is 20% of the variable cost, right? Okay. So this is the thing. I'm not solving this here. I'm not solving this here. Question number 3. I'm now solving this question number 3 at the bottom of this page. I'm solving it here, right? Question number 3. It is saying that 20% of the cost is material cost. Okay. Now I'm writing that cost of material. That's cost of material is 42,000 into what was the percentage? It was 20%. Sorry, it was 20%. So currently my cost is 20%, right? This is the cost of my material. This is the cost of my material. That's 42,000 multiplied by 20%. That is $8,400. This is the current cost. Current cost of material. This is the current cost of material, right? Now let's move ahead. It is saying that one of the materials used is stainless steel, which is budgeted at 2,000 per unit. Okay. Including in 8,400, there is one material which costs $2,000 here, that is including $2,000, and the remaining is 6,400 obviously, and the remaining is 6,400. This is the cost of stainless. This is actually the thing, that is one of the material, because that's the total material cost. But here, but an alternate corrosion resistant metal costing 25% less can be used. From that 2,000 per unit, 25% less can be used, because we are having some alternate material. We are having some alternate material, and that will be used 25% less. That will be used 25% less. Okay. So that means this will be used 25% less. So it will cost to me 1500. Here it would become 1500, right? And next it would be the production director believes a 15% discount can be negotiated for the remainder material. It can be negotiated for the remainder material. So for the remainder, and the remainder is 6400, and now I will be taking it 85 percentage, that is 15% discount. So it would become 5440, and obviously my collective cost would be the revised cost, it's 6940, isn't it? 6940, and that's my revised cost, and that is my revised cost. So it is a very simple calculation, but um, I am you're welcome, but I'm explaining it in a simple manner that you can understand this requirement. That's 6940, right? That's 6940. 6940. It is my revised material cost. Now let's move for the question number 4. Question number 4 and 5. Question number 4 is very simple. The production director has asked about the implication of production planning if the company wishes to extend the production life cycle. At what stage is the new unit is most likely to go under a product development? Yes. At what stage the product is likely to go under product development, the new unit, and that's the maturity stage, because in that stage you are trying to redevelop your product that is bringing the innovative features. Now question number 5. The chief executive wants to brief the advantages of using lifecycle costing. Which of the following statements related to the advantages of lifecycle costing are correct? Which of the following? Number 1, it draws management attention to the cost of the product which other costing methods usually treat as a periodic cost. Yes, I'm explaining the first point. It draws the management attention. It draws the management attention that all the costs need to be related to the product. Let's say there is a fixed cost, and fixed cost is a periodic fixed cost, right, in the marginal costing. But life cycle costing is saying that this is a product cost. So all the costs are included in the life cycle. All the costs are included in the life cycle. All right. So this is the correct statement. Number 2, it focuses on measuring the production cost from concept to withdrawal. From concept, that is R&D, to withdrawal, that is decline. From concept to withdrawal, rather than reviewing the cost on period by period basis. The answer is yes, because it is measuring the performance of the product from start to decline, from concept to withdrawal. Number 3, it focuses on it focuses on what customers are prepared to pay for a product and establish cost budget based on expected selling price. The answer is false. It is the target costing concept. It's not the life cycle concept. It is actually the target costing concept. So this is wrong. So that 1 and 2 are correct. And we are not finding 1 and 2. So that means option B is correct. 4 is saying that it aids understanding of relationship between decision making at the design stage and the cost of other functions such as marketing. Yes, it measures the cost with respect to the stages of the life cycle. So option number 1, 2, and 4 are actually the correct one. These are the correct one, right? Okay. Lemon, I'm addressing your question. I took 42,000. I took 42,000 from here. It is saying that currently material costs are 20% of variable production cost. And in the above, there is the variable production cost, which is 42,000, right? Lemon, do you understand this thing? 42,000 you were talking about? Lemon, Now that's good. Now students, we are taking a 15 minutes break uh, because here we are having pray time as well. So let's take 15 minutes break, right? So we will be resuming at 6:40 p.m. PST, right? Around 6:45 p.m. PST. Do not disconnect yourself. I am just turning off my camera and my video. I will be resuming it after exactly 15 to 20 minutes near around. So be connected. Hello, friends. We are now back from the break, and I hope you all are here. My voice, screen, video is all clear to all of you. Will you people please reply me in the question box? My voice, screen, video is all clear. All right. All right, students. Now that we are proceeding with this lecture of life cycle costing, and then we have to move towards the another topic. Now here see that point to be noted is that what may be the successful strategies in life cycle. The successful strategies in life cycle is that since that you can easily estimate approximately 70 to 90% of the cost, 70 to 90% of the cost in advance. So there is a very strong argument that you should use the cost control technique right from the start, since you can estimate that your cost, 90% of the cost can be estimated. So that's a very good news for you. If you are successful in estimating 70 to 90% of the cost in advance, then you should exercise the cost control element right from the start, from the design stage of the product. And one more important thing, if you are launching the product in one city, in one state, so you should launch throughout the country, or you should go to launch this globally, so it will increase the return over the life, right? So what successful strategy you can bring into the product, that cost control right from the start, cost control right from the start. All right, you can increase the sales by introducing the product into different other market segments, right? By introducing the products into different other market segments, by, you can say, introducing the products in other market. One more thing, when your research is completed, there might be threat to your confidential information through big data or through any kind of hacking, or even your key employee may left. So as soon as your research is completed, as soon as your as soon as your research work is completed, you should you should you should launch the product immediately. You should launch the product immediately as soon as your research work is completed. So this is a very good message for the life cycle, is that when your research work is getting completed, when you're finished with your research and development, so launch the product immediately as soon as possible. So I'm saying that launch the product as soon as possible after research and development. And whatever the marketing technique, you will be using, whatever the pricing technique you would be using, whatever the technique, use that technique. There is no argument on that. But try to achieve break-even point as soon as possible, because there is a limited time. There's a limited life. There's a limited life. Try to achieve the break-even point as soon as possible. So achieve the break-even point as soon as possible. So these are some favorable advices in the product life cycle, right? Now these are the things. Now let's go back. Now move forward. This is the question, and probably this would be the last question for this life cycle. Then we will be starting throughput accounting. Which of the following statements are true regarding the justification of the use of life cycle costing? Please read all these for information, and then we will be solving this question. But read it with a very thorough attention. All right, now let's proceed with this thing, and I'm going to explain these statements so we will be able to note down which which statement is correct. Life cycle are becoming increasingly short. This means that initial costs are increasingly important component in the product's overall cost. Is this statement true? The answer is yes. Because nowadays, if I can give you the example, nowadays as the technology is getting increased day by day. Technology is getting increased day by day. So your you can say so your products life cycle are getting shorter. So initial your initial cost is very important. Number two, number two is that number two is that product costs are increasingly weighted. That's not the waiting for the time. That is the weightage to the start of the product life cycle, and to properly understand the profitability of the product, these costs must be matched to the ultimate revenues. Yes, this must be matched because the costs are getting increased, and the cost must be matched with the revenue so that you can be able to uh, estimate your profitability. Number three, the high cost, for example, research in the early stages in the product life cycle necessitate a high initial price. It is not true because life cycle is not about setting the selling price. Life cycle is not about setting the selling price. Life cycle is about to estimate. It's not about estimating the selling price. It's about linking to the cost to the revenue. All right. So it does not mean that you have to launch your product with a high initial selling price. It's not about increasing the selling price. It's about matching the cost with the revenue. So this statement is not correct. Number four, traditional traditional capital budgeting do not attempt to minimize the cost or maximize the revenue over the life cycle. The answer is absolutely yes. It's A. Why? Because traditional capital budgeting does focus on the first year result. That means 1 year result. But life cycle costing focuses on the entire life cycle. Right. So this was the topic of life cycle, and I am now going to discuss with you people the another topic, or you can say another chapter, and that is the throughput accounting. It's one of the a little bit tricky, and or you can say the complicated area. So here I am displaying you the file of throughput accounting. It's being loaded here. Now this is yet another chapter, you can say another topic, that is throughput accounting. This is a separate topic, throughput accounting. Now what is throughput accounting? Listen that throughput accounting is actually the concept. It's actually the concept to maximize the profit for the organization. It is actually the concept of maximizing the profitability for the organization. Number one, if I can say it in a simple word, that if I can, it's very simply that throughput accounting deals with the limiting factors. It deals with the bottlenecks. It deals with the limiting factors. Now, what is the limiting factor? What is the bottleneck? What is the limiting factor? I'm going to explain it. See that, see that it is written that it is dealing with the bottleneck resource. It is dealing with the bottleneck resource. Now, what do you mean by the term bottleneck? You probably are aware of the fact that there are the limiting factors, right? There are the limiting factors in this situation. For example, I need 10,000 kilograms and I am having only 9,000 kilograms. That is, I am experiencing a shortage of raw material. If I need 2,000 labor hours and I am having only 1800 labor hours. So that means the labor hours are actually the constraints. Now, what is throughput accounting? Throughput accounting, it deals with the bottleneck resource. Now, what is the bottleneck resource? Bottleneck resource is the constraint. Bottleneck is the constraint. It is the barrier in the internal process. It is the barrier, or you can say it is a constraint in the internal process. Now, what do you mean by the term internal process? See that. Observe my body language as well. Focus on my words. You need raw material, right? You need raw material. You need raw material. After purchasing the raw material, repeat, after purchasing the raw material, you have inserted in your production process. I have purchased the raw material from the market. I have inserted in the production process. After purchasing raw material, this is a very simple words. After purchasing the raw materials, after purchasing the raw materials, the internal process might be having some barriers. Now, those barriers are called as bottleneck. So that means the bottleneck will not be the raw material. The bottleneck will be either machine hours or labor hours, because it is saying that constant in the internal process. In the internal process, that is after purchasing. Focus on the word after purchasing the raw material. After purchasing the raw material. So that is in the internal process. If I can give you the example here, that you inserted the raw materials, you inserted the raw materials. This is the process and this is the output. Now in the internal process, there might be some problems. And those problems are labor hours, those problems are machine hours, right? And these problems are termed as bottleneck resource. These are the bottleneck resource. And remember that when there are bottleneck resource, when there are bottleneck resource, right? When there are bottleneck resource, obviously, when there are bottleneck resource, obviously the output would be restricted. The output would be restricted. So due to the bottleneck, your output is restricted. So anything which acts as the barrier, that will definitely restrict your output. Anything which acts as a barrier, that will be restricting your output. So the bottleneck are either labor or machine hours. Now let's move ahead. That's theory of constraints. TOC, theory of constraints. That's not test of control. If any one of you had studied the AA paper. So it's a theory of constraint, and theory of constraint is actually, it's a theory. It is a theory, right? It is a theory which says that in a short term, in a short term, that means they are indicating less than a year, less than 1 year, or you can say less than or equal to 1 year. In a short term, it says that in every process, it's a theory, right? It's a theory. In every process, there is a bottleneck. In every process, there is a bottleneck resource. Company should focus to eliminate the bottleneck resource. Yes, if my bottleneck resource would be eliminated, definitely my output would be increased. And simultaneously, there is a possibility that when one bottleneck is eliminated, then other process may become bottleneck. It quite may be possible that these are bottleneck. I eliminated the bottleneck resource. I am more focusing towards the more production, and it quite may be possible that when one process, the bottleneck process is eliminated, the next process can be the bottleneck, right? So when one bottleneck is eliminated, then other process may become, it's not saying absolutely, it's saying may become the bottleneck, right? So this is actually the theory of constraint. So identification of bottleneck and eliminating is the continuous process. So identification of bottleneck and eliminating it is a continuous process according to this theory. According to this theory, this is known as the, this is simply the TOC, that is theory of constraints. So according to so we can say that finding and eliminating is a regular process, right? Because it's not always be the case that your production is 100% available. There are some barriers, there are some bottlenecks. The machine may be damaged, the machine may needs to be repaired, the labor may become maybe on the medical leave. There are so many barriers, right? There are so many barriers. I will be writing something on this blank page and then I will be starting the question, right? So this is the blank page I have intentionally left to note it down something. Point to be noted is that my resources are being split into two categories. Number one, is that of direct labor plus overheads, because this is known as the conversion cost. This is known as the conversion cost, right? And I have separately placed direct material purchased. Now see that there are three resources: material, labor, and overheads, right? Material is not a big issue. Material is not an issue, in fact, here in bottleneck. In this, there would be bottleneck, right? There would be bottleneck. So that means we have some limited labor hours, we have some limited overheads, we can call it a limited availability. And when there is a limited availability, you will be calling it as a fixed, because you are not having more than this available requirement. You are not having more than this available requirement. So a direct material and direct labor, it's a bottleneck. All right, they are limited available, or you can say they are limited fixed for the time period. They are limited fixed for the time period, right? They are limited fixed for the time period. And so this is only assumed as the variable cost. This is only assumed at the variable as the variable cost. Now, in throughput accounting, first observe me. Sale minus all the variable cost is contribution, right? When you minus all the variable costs from the sale, the resulting figure is called as contribution. Sale minus all the variable cost is the contribution, right? Now, sale minus material cost only, because we have some limited conversion cost. We do not have too much labor or machine hours. We have some limited thing, all right? So sale minus, you can say that sales less direct material purchased, the resulting figure is called as throughput. What is throughput? Throughput, or you can say this is the throughput contribution. So sale minus only direct material purchase. And when you will be deducting further conversion cost, then you would be having the net profit. You would be having the what? The net profit. So this is the pro forma in throughput accounting to calculate the final net profit. Now, what is the concept here? Now, what is the concept here to study this throughput accounting? What is the concept here? What is the concept here? The concept here is that we have some limited resources. We have some limited resources, right? We have limited resources. We have some barriers. So we have simultaneously, we have bottleneck resource. We have bottleneck resource, right? We have bottleneck resource. All right. So we need, this cost is fixed. This cost is periodically fixed. It is written here. So when something is fixed, you do not need to you do not need to consider that thing because it is fixed. Regardless of any production or any kind of thing, this cost would be fixed. This cost would be fixed regardless of anything, right? So you need to maximize the throughput. You need to maximize the throughput. You need to maximize the throughput. So we have some limited resources, and so this is the throughput, right? This is the throughput. So what you are supposed to do, you will be calculating, selling price, that is on per unit. You will be calculating direct material, that will be again on per unit. Now you will be having throughput return. You will be having throughput on per unit, and you have to divide. You know that there is a contribution per limiting factor, but here we will be having bottleneck. We will be having bottleneck. And so it is bottleneck, and bottleneck will be either labor or machine hours. Either labor hours or machine hours, right? Either labor or machine hours, because material is not the limiting factor. It's not the constraint here. So this is bottleneck, that is hours per unit. Now this figure would be called as per hour. This figure is known as return per bottleneck hour. It's written per bottleneck hour, right? This figure is the written per bottleneck hour. I'm doing it underlined. Next. Now, next thing is here that material cost is counted. Now we have left with conversion cost. We have left with conversion cost, that is direct labor plus production overheads. That would be the total factory cost. So you need cost per hour. So you would be taking total factory cost divided by total bottleneck hours. Total bottleneck hours, right? So here it is number one, return per hour, and that is you have to place your focus on bottleneck resource. So you will be having return per bottleneck hour, you will be having cost per bottleneck hour, and you need to calculate TPAR. That is TPAR. TPAR stands for throughput accounting ratio. That is throughput accounting ratio. So that is actually the return upon conversion cost per hour, that is per hour. And if your TPAR is greater than 1, less than 1, or equal to 1, if it is greater than 1, then it means profit is expected, less than 1, loss is expected, and if it is equal to 1, that means that is the break even point, right? So this is actually the measurement of the profitability in the throughput accounting. So throughput accounting actually deals with this return per hour, because you need to have the return on per unit. No, not at all, not per unit. Imagine that this product is being made in 4 hours, so you need to have and hours are the limiting factor. If this product is being made in 4 hours and hours are the limiting factor, I do not need the return on per unit, I need the return on per hour, right? So this will be on per hour, per hour. And similarly cost per hour, that's a measurement of per hour, because hour is the bottleneck resource here, either machine or labor hour. So let's now move on to the next question. This is the question: Sky Limited operates through an environment where products go through two different processes. Now, if I can, before going to start this question, before going to start that, I was just seeing the sequel. Before going to start this question, you can see that if there are two processes, that is process one and there is process two, your resources are being inserted, and similarly your product is being passed through two different processes, and definitely there would be output. If process one is slow, that means it is a bottleneck. If this is slow, that is a bottleneck. Any process due to which, because let's say if one is the assembling department and another one is the finishing department, now because of any particular department, your ultimate output can be restricted. Because of any particular department, your ultimate output can be restricted, and that is the bottleneck resource ultimately. So this product passes through two different processes, that is process P and process Q. Please read this thing. What is the cloud throughput per hour? Now they are trying to say throughput per hour, that means return per hour. All right, so please read this question very thoroughly and I will be solving it quickly. Hurry up, read this question. All right. Now, the question here is that there are 8 machines operating at 90% capacity. We need actual time. We need active time, right? There are 8 machines in the process P. In the process P, there are 8 machines at 90% capacity. Each machine produces 6 units per hour. Each machine produces 6 units per hour. Okay. Now, there are 8 machines who are operating at 90% capacity and they do produce 6 units per hour. Can you people tell me what this figure is actually showing? What is this 43.2? Can you people just type in the question box? What do you mean by that? By this figure 43.2? Can anyone tell me? No, no, it's not time available. It's not time availability. It's not time availability. No, not at all. No, yes, yes. It's not machine hours. It's not machine hour. See that I am interpreting it again. In 1 hour, it is written that each machine produces 9 units in 1 hour. Sorry, 6 units. I was talking about product P. Each machine produces 6 units in 1 hour, and there are 8 machines. So this 43.2 would be units in 1 hour, right? These are 43.2 units in 1 hour. And what would be the next story? What would be the next story? What would be the next story? The next story would be that these 43.2 units, these 43.2 units will be transferred. Would be transferred where? It would be transferred to, yes, product Q. Now see that these 43.2 units would be transferred to process Q. So here I will be writing here process Q. Process Q. There are 6 machines and the same story is there. They are producing 9 units. They are producing 9 units, right? So 6 machines into 85% into 9. And the answer is 45.9. Sorry, in 1 year, nah, units in 1 hour. All right. So which process is a bottleneck? Yes, process P is a bottleneck because it is because in process P there are 43.2 units which are being transferred to process Q, and process Q has the ability to make 45.9 units. So which product is the bottleneck? It's obviously process P is the bottleneck because of this output is getting restricted. Process P is the bottleneck. All right. So can you people please calculate this throughput per hour and give your answer in the question box? That should be written per bottleneck hour. All right. Okay, Shushmita, I am repeating it again. Do you please reply in the question box? Do you agree with this 43.2 units? How they are computed? Okay. Now, now see that 43.2 units are produced in process P. They are being transferred to process Q, and process Q has got the ability for 45.9 units. For this 45.9 units, right? So let's say process P 43.2, they are being transferred to process Q, and obviously if they have got 45.9 units in a capacity, the ultimate output will be 43.2 because the legacy is coming from process P that is restricted, and the output will be 43.2 units despite of the fact that 45.9 is the maximum capacity in the entire factory. So process P is the bottleneck, right? Do you understand this thing now? Uh, Miss Shishmita, do you understand this thing? Okay, that's great. Yes, Gaurav. Gaurav, no, not at all. It's not correct. Aurangzeb, your answer is right. Now, without mentioning the name of the students further, I'm not going to solve this question. So this is process P, which is the bottleneck. This is process P is the bottleneck, right? And now here, I am going to solve this. The selling price is, what is the selling price? The selling price is 20, but 15% discount would be given. 15% discount. So it's 20 into 85%. So that would become 20 into 85%. That is $17, which is the selling price. And I need the raw material cost. And I need the material cost. That is, where is the material cost? Yes, it's 5. Material cost is $5, right? So 17, 5. 17 minus 5, that is $12. And that is $12. That's on per unit. And that will be termed as throughput per unit divided by bottleneck. Which process is bottleneck? Process P is the bottleneck. And it currently takes 0.2 hours and 0.3 hours to make a unit machine P and Q respectively. And now I will be taking that process P bottleneck. So it is 0.2. So you should simply divide it by 0.2 and you will be getting a $60 per hour. That's a bottleneck. And that's written per hour. That's written per hour, right? So that's a very simple thing. That is a bottleneck. That is a bottleneck. And so it is the 60 per hour is the written per hour. It's not calculating the entire throughput accounting ratio. They are just calculating through written per hour. Now that's the solution. And now I'm going for the next question. This is the simple question. Following are, which of the following is the throughput accounting ratio for this product? So you just need to calculate throughput accounting ratio. Throughput accounting ratio, that is TPAR. Now see that question. The following information is available for a single product. Units produced 500, time taken 200 hours, maximum time available 200 hours, material purchased, material used. You will be taking material purchased because it is the throughput that is after purchasing the raw material. That is after purchasing the raw material, right? So material purchase is 3000. Material use we will not be considered because I have purchased the quantity, the certain quantity of the raw material. I have purchased a certain quantity of the raw material, but I am not able to use it. I have purchased the quantity of raw material, but I am not able to use it because of the because of the constraint, because of the constraint, limiting factor or barrier, right? So I have purchased the raw materials, right? Now labor and overheads, it's collectively the 3500. Sale is $9,000. Raw material C, always take the purchase figure because it ignores the movement of stock. That's 3000, and that would be 6000, right? So 6000 would be total throughput. Total throughput. And now I will be having total conversion cost. That would be $3,500, right? So I need, and what is the maximum time available to me? That is 200 hours. I do not have enough time. I do not have enough time in this question. That is only 200 hours, right? That is only 200 hours. And so I will be taking that time. So simple at all. So I will be having return per hour and cost per hour. So that is throughput, and that is 6,000 per hour. That is 6,000 divided by 200. That is $30 per hour. Now this is the return per hour, and I will be having $17.5. That is cost per hour. That's on number two. That is conversion cost per hour. So simply you need to calculate the TPAR. TPAR. Sorry, it's TPAR. That is return per hour 30 over cost per hour 17.5. That's 1.7. That's TPAR, right? That is the TPAR. That is a TPAR. Shows it, Mahmood, because this is a matter of the labor cost is assumed to be fixed. That is why we did not consider that. Now, let me ask you that all of you are in the WhatsApp group. All of you are in the WhatsApp group. All of you are in the WhatsApp group. That's good. Now, the WhatsApp group link had already been shared there. All right. Now, students, we have left with Michelle. Harry, you are not here. All right. The WhatsApp group will be, the link is shared. The link is just shared. You people can join the WhatsApp group. The link had been shared. All right. The link had been shared. Now, students, we have got the, all right, Faisal. Now I'm going for the next slide. That is the assumptions in throughput accounting. It assumes only material as the variable cost. It assumes conversion cost, labor, and overheads as a fixed cost. It rejects overstocking and preferred GID, no closing stock, because with the intention, and throughput accounting aims to maximize the profit. Throughput aims to maximize the real profit, which is achieved by selling all the goods, no overstocking. No overstocking. Throughput is actually aims to maximize the profit. It was originally started as a performance measurement tool. It was originally started as a performance measurement tool, that how your performance is within the limited availability of the resources. And performance is being measured according to TPAR, that is profitability. That is what the profitability, right? So the performance is measured according to TPAR, that is the profitability. So assumptions in throughput accounting. Now you are having one case OTQ, and that is the following scenario relates to 1 to 5. That's a solar system, and this is the case study, right? And I am telling you that these are the question which is based on the theory of constraints and onto this throughput accounting, right? So I need to use this blank sheet for it. I think I should close on all these other slides. These are few results which I have shared for your motivation. For your motivation, right? That if these students can do, you can also do, right? So don't worry about this. You can achieve the success. I should close all these windows so that it is easy for me to move from one screen to the next screen. Now, This is the question, and I am telling you that this question number one is not related to the case study specifically. This is a simple thing. A newly appointed trainee at Solar System is having a question as she is confused about the term bottleneck. Which of the following would be your answer to her to define the bottleneck? Which resource is a bottleneck? I am telling you, the bottleneck resource is that which is in short supply. That means demand is more and your supply is restricted. So that is actually the D answer. When the demand of the resource is greater than the capacity of the resource, right? When the demand is greater than the capacity of the resource. So this is actually the bottleneck resource. When your demand is getting increased than your available capacity. Now, they are selling two products, and question number two is about calculating TPAR for both large panels and the small panels. For both large panel and small panel up to 2 decimals, we need to calculate TPAR. Now, now I need to now I need to calculate this TPAR for these two products. Let's start with this question. Let's start with this question. And remember one thing, we need active hours, right? I will be solving it here. That is solar system case OTQ throughput. Now for option number one, it was clearly over there. It's number two that we need to calculate TPAR. And you all know that how to calculate TPAR, that is return per hour and conversion cost per hour. Now simply moving towards this question, please read this question very quickly. Have a quick look on this question. All right. Now, whatever the information you have read, now let's do it together because we are having short time period, bottleneck resource. Solar system make two type of solar panels. Now I'm reading the punchline. They are available from 7 to 8, that is 13 hours. They are using machine C, machine M, machine A. These are the information, selling price and material cost. Here, out of this is 12 million cost of labor and all factory overheads. Now that means that it is the conversion cost. It is the conversion cost. Out of 13 hours, workers take 1 hour lunch break. Remember, we always need the active hours. We always need the active hours. So there are 13 hours minus 1 hour break. So that means 12 hours I need actively. right? 12 hours active. 12 hours active. It is written that one more important thing for you. The good news is that they have identified machine M as a bottleneck. These are the things. They have correctly identified bottleneck, which is machine M 1.4 and 0.6. And remember one thing, machine for the remaining machine C is utilized 85%, machine M and A are utilized 90%. All right. And one important thing is that in the above, in the first paragraph, it is written that they are operating for 50 weeks, 5 days in a week. And this question is a yearly data. This question is having a yearly data. 5 days a week, there are 50 weeks. All right. Now see that 12 hours daily, 12 hours daily, there are 5 days and there are 50 weeks. So that means 12 into 5 into 50. That becomes 3000 hours. And out of these 3000 hours, machine M is being utilized 90%. So that means your maximum available time is 90% for machine M, because in throughput, we have to place our focus on the bottleneck, and that becomes 2700 hours machine M actively. This is 2700 hours, right? Now, here it is written that 12 million each year at the plant. 12 million each year. Conversion cost is 12 million. So my conversion cost is 12 million. And for 2700 hours, so I need cost per hour. That is 12,000, 2700. So that is 4,444.44 per hour. That is the cost per hour. That is the cost per hour, right? That is the cost per hour, and that is known as the conversion cost per hour. That is the conversion cost per hour. Now we need to calculate the throughput accounting ratio. We need to calculate throughput accounting ratio for large and small panel. For large and small panel, right? The selling price is the selling price is 12,600 and 3,800. 12,600 and 3,800. This is the selling price. Material cost is 4,300 and 1,160. So that is 4,300 and 1,160. That is direct material. And your resulting figure would be throughput. Your resulting figure would be throughput, right? So 12,600 minus 4,300. Now that is something 8,300. Yes, that is $8,300. And here 3,800 minus 1,160. 3,800 minus 1,160, that is 2,640. 2,640, right? And so, and which process is the bottleneck? That is machine M is the bottleneck. It was written here, machine M is the bottleneck, and to make one unit, and to make one specific unit, there in the machine in the process, machine M is the bottleneck, right? So in order to make one unit, it needs 1.4 and 0.6 hours. 1.4 and 0.6. So here it is divided by bottleneck hours per unit. It was 1.4 and 0.6. That is written per hour. That is written per hour, right? So it is $4,400 per hour. It is 8,300 divided by 1.4. That is 5928.57, isn't it? Yes. So we have written per hour and we need to calculate cost per hour. We have already calculated above. We need to simply put the sign of divide, and that is cost per hour. That is simply 4444.44. Simply here you will be having TPAR. That's 1.33 and that's 0.99. So that is the thing. 1.33 and 0.99. That's 1.33 and 0.99. That is simply the throughput accounting ratio. I just calculated the throughput accounting ratio, right? Now, the next requirement is of the optimal production plan. And remember that that product will be produced first, which has got highest TPAR, which is this in this case, which is in this case, it's a large panel, not the small panel, right? So it is the large panel. No, Amna Ahmed, it is per unit. It's not the total, it's per unit. Since this is, you might be assuming that this is the very large amount, but this is actually the per unit, right? It is actually the per unit. You can see that this is large panel per unit. It's expensive. Now, question number 3. What is the optimal production mix? Optimal production mix. That's question number 3. That is optimal production mix. Optimal production mix is based on return per hour, or you can say the TPAR, right? For large and for small. Large and small. That's return per hour. Uh, as above in part 2, right? As above in part 2 that we had calculated 5928 and 4400. That's 5928 and 4400. So obviously this would be ranked first and this would be ranked second. So initially it should be produced first, but there is another requirement here. There is currently a plenty of spare capacity on machine C and machine A, and machine M is still a bottleneck. Maximum annual demand for large panel and small panel is 1800 and 1700. Assuming that large panel have a highest TPAR, yes, they are saying large has the highest TPAR. But the point is that as part of the government scheme, it has agreed to supply 1,000 small panels each year. That's a contract with the government. That's a contract with the government. And whatever your profitability is giving you the message, whatever the profitability, whatever the profitability is giving you the message that you need to produce that product at your top priority. Yes, obviously you should give the top priority to the large panel first since it is more profitable, but still there is a contract. So whenever there is a contract, you should follow your contract, right? You should follow your contract. So there are 1,000 units to be supplied under the government scheme. It was agreed. It was agreed. So first we will be producing regardless of the profitability ranking. I am writing here, but 1,000 units as an agreement with the government. So we will produce small first. All right. Now see that what is the availability? The availability is here as we calculated in part 2, that is 2700 hours availability of machine M, 2700 hours. So I have only 2700 hours, that is of machine M, and first I will be producing product small, and the maximum demand, uh, you should not supposed to meet the maximum demand, you should supposed to meet the agreed demand, agreed number of units. You should meet agreed number of units, right? And agreed are 1,000 units. So that's it, 1,000 units. So product small, 1,000 units will be made first, as this is the contract. And from the question it is straightforward available that to make 1 unit is 0 0.6 hours. And remember that we need to focus on the bottleneck. We need to focus on the bottleneck, that is 0 0.6. So here you should multiply with 0 0.6 hours. And out of 2700, out of 2700,000 into 0 0.6, that is 600 hours. Sorry, it's 600 hours that will be used by product small. And whatever the remaining hour now, that's 2100. Whatever the remaining hours, whatever the remaining hours, now that will be used to make large products, right? And that is 2100 divided by 1.4, because it's a large panel to make 1 unit. So it is 1.4, and so it's 1500. Maximum production which can be made is 1500s. So what lesson we had learned, that despite of the profitability ranking, we need to consider our contractual obligation first, and the contractual obligation had been met, and now you will be proceeding towards the large product. So here the point is, my answer is the large I am making 1500, but small will be made first, that is 1,000, right? So this is the optimal production plan. Now from the available time, considering this available time, we can easily solve out these two theoretical portion of MCQ. Then we will be winding up, and tomorrow and day after tomorrow, we will be focusing on some CRQ kinds of questions and some other areas as well, including few MCQs or whatever. Let's see tomorrow. But right now, we need to solve these theoretical questions. Theory of constraint is an approach to the production management. Which one of the following correctly describe the key financial concept? Will you people please go through all these options? Key financial concept. Focus on the financial concept. Focus on the financial concept. And the key financial concept is C. Turn raw material into finished goods as quickly as possible. thereby maximizing the net cash generated from sales. Because when you will be able to quickly turn raw material into finished goods, you will be able to sell it as quick as possible and maximizing the net cash generated from the sales. So C is the key financial concept. Sell the product as much as possible, as soon as possible. Number 5, please read all these things, all these 4 statements, and try to mark the correct answer. Then I will be solving it. I will be explaining it. Following statements are mentioned about the concepts of throughput accounting and the theory of constraints. Number 1, throughput was originally designed for the purpose of decision making. It's cross. It's not for the purpose of decision making. It's for the purpose of performance measurement. It's for the purpose of performance measurement, right? It was for the purpose of performance measurement. Theory of constraint, I mean the throughput accounting was originally for the purpose of performance measurement, that how you will be performing, how you will be performing with respect to the, with respect to it. Theory of throughput accounting, no, so no, yes, it's for the performance measurement. Number 2, theory of constraint prefers the optimization of production performance. Yes, it's optimization of production performance. Your production performance should be optimized as much as possible. You should produce to sell. Number 3, TOC states that at any time there will be bottleneck resource or factor that sets a limit on the amount of throughput that is possible. The answer is yes. And throughput accounting prefers to hold large amount? No, they prefers just in time. So that is a cross. So 2 and 3 are the correct options. 2 and 3 are the correct options, right? 2 and 3 are the correct options. Now students, uh, once again, I'm saying that, I'm repeating that you people are good at, you people are good, you are here till your in your skills module, that is applied skills module. You can achieve the success, you can pass out the paper if you will work hard and smart. All right, so we will be meeting tomorrow. We will be meeting tomorrow, and the tomorrow's agenda would be to discuss performance measurement. And this class is still here and must revise it at home. You all are in the WhatsApp group as well. We'll be communicating later on in case of any kind of support like handouts and whatever the stuff you want. So me, Haris Sanif, is signing off from this webinar. See you tomorrow. Have a good day. Have a good evening. Bye bye. Take care.